Joining us on Street View at lunch this afternoon is Anil Rego, founder and CEO of Right Horizons. Afternoon, Anil. First up, what's your call on the market in the near term? Because clearly the markets have been under pressure for a while now. Do you think there's a case for some sort of a pullback rally?
Definitely. I think there's been a big fight between, both sides of the market. And, one can see some, reasonably big moves, especially if you look at the momentums. Many of them have cooled off some bit. So I think that's a bit of a worry there. Plus, surprisingly, market has also not carried on and moved forward there. So at least at a point like this, I would rather wait and watch for some time. If I look at the fundamental triggers, many of them at a time like this would be reasonably negative. I was hoping for an interest rate cut to have happened, but that did not. This end of the year is still going to be tight on liquidity. So one would see interest rate sensitives again possibly under pressure. One would need to probably wait out. I would look at first week of April, see how interest rates pan out. After that, does the pressure ease off? Does it cool off a little bit, and then maybe get back into buying?
Anil, hi, afternoon. What is your expectations in terms of what may come about from the Coal India board meeting? Does it seem like Coal India is going to actually oblige and sign FSAs with power companies?
See, it has its positive for both sides. I think Coal India definitely it would give in some bit of long-term view there, but the pricing then it may just take out the upside, and I would believe in the long term I think coal prices should tend up. So broadly it will be negative for Coal India over a longer tenure, but I think it would be definitely positive for a lot of the power companies, utilities. And I think one big worry also for the country as a whole has been power. So I think good for the power utilities, bad for Coal India.
Anil, what would be your call on the IT pack? Because mixed set of cues coming in for the IT pack in general. On one hand, the weak rupee is obviously going to help them, and also guidance from some of the big global players like Accenture has been somewhat positive. But we've just got news coming in of a possibility of a hike in H1B visa fees as well. How do you read the IT pack?
Yeah, in a market which is volatile, I think IT would do relatively better. However, it would a lot depend on how customers are doing. So right now the US is strong, Europe is in not great shape. So one would need to see how does the strength in US continue, and if that happens, I think broadly from a volume side, I think that would be positive. I would definitely see that continued pressures on margins, the H1B visa fees, etc., will definitely dent some bit. There will, I think, also be continued salary hikes happening. The positive, of course, is if things are volatile, then the rupee will I guess depreciate. So that will give some bit of buffer there. So in such time that we see volatility and the rupee remaining weak, I think IT would do a little better. They have underperformed for some time, so I would think going forward that maybe the underperformance will come down.
Actually, two stocks, and how would you go about trading them? Tata Steel as well as Godrej Industries, which is now at 250 thereabouts.
Well, Tata Steel is probably the strongest metal stock right now. I think downside here is probably 415, 420, but on the upside we could easily see levels of 500 plus. Godrej Industries also a fairly strong stock, but now is moving sideways. So once this sideways consolidation is over, we could see further upside. The stop for long positions here could be closer to 230, and we need to break out of levels of 260, 265 to reach probably 315, 320.
Anil, a quick final call on defensives. Would you still keep away from defensives like pharma in this market?
No, I think I would probably participate in them, especially considering the current market construct. And I would add, I would also have pharma as part of my portfolio with FMCG and the other companies. So pharma would, I think, do better.